investors, and welcome back to Stocks to Watch. I'm Ashley Berry, and this interview is being disseminated on behalf of Feneck Consulting. Speaking of which, John Feneck is joining us. And before we dive in, John, I just want to start by highlighting two upcoming exciting conferences that you're hosting May 17th through the 19th in Washington, D.C., followed immediately by May 20th through the 22nd in Fort Lauderdale, Florida. They've become must-attend events for investors focused on precious metals, mining, critical resources. I have had the absolute pleasure of attending several of these conferences, and I will say that you bring top-notch companies to the table as well as investors. So if you can just give us a little bit of background and what folks should expect or anticipate coming up in May.
Sure. Yeah. Thanks a lot, Ashley. Always a pleasure to be back. These conferences were designed by me a little under 3 years ago to kind of fill a that I saw in the conference space, which is on both sides of the desk. The companies would come to me because I consult for companies, and they would say, look, we see these service providers, we have people trying to sell us stuff, we have social media people all over the place. Like, we want to meet with investors, right? And this is something that I heard over and over again. On the investor side, I hear like, hey, I don't want to be at a booth where it's really loud and I can't get to know the CEO or the exec, and I want to have a sit down meeting with this person for 15 to 25 minutes, right? So we designed a conference to address both of those needs, and we've been doing this now. I think these are our sixth and seventh ones. And I'm from the DC market originally. I know you live there as well. I love DC, and clearly with Trump in office, it's got a new shine to the city. It's been cleaned up a lot, and I think that's going to draw a lot more investor interest. And then for Lauderdale, Florida, I mean, you've been to the Four Seasons. It's less than 4 years old. It's on the ocean. It's a great resort. So both hotels are top shelf, no pun intended. You know, these are great events for people to attend because when I started attending these, it was only 2019. I never attended a conference before then. And it was really life changing for me to sit down with CEOs and really pick their brains about things that I thought I knew, but a lot of times I didn't know.
Mhm.
And so it's not just good for buying stocks, but it's also good for selling stocks. Like, if your thesis is not intact, you can sell a stock after coming out, and meeting with these people, right? So like it goes both ways. But I think in this environment, in a bull market, you have to get out there and do some of these things because it'll be life changing for your
Yeah,
portfolio.
absolutely. And I will just add, John, me having the opportunity to sit down with these CEOs post conferences, and the feedback is just phenomenal. And you're really bringing in top notch, top shelf, as you say, investors to these conferences who are very serious about what it is that they're interested in their portfolio, and your companies, the companies that you sign here to come to these conferences are just phenomenal and really promising. So best of luck. We'll mention that
Thank you.
again at the end of the interview, and let our viewers and listeners understand where they need to go to learn more. But since the last time we spoke, I think it was about a month ago, we've seen several major US banks raise their price targets on both gold and silver. So how would you
Yeah.
say, what's the sentiment? What does it signal, if anything, for the gold and silver equities? Before we continue, be sure to subscribe to our channel and ring the bell to get notified about our latest videos.
Sure. So last January, we started to see the big banks in the US come around to higher gold prices in particular. They weren't coming out with higher silver targets then, but they were saying, 4,000 gold, 4,200 gold. And these were banks many times that were short the commodity over the years. So like JP Morgan has got a history of going after gold and silver on the short side. They've been fined billions of dollars for manipulation in metals prices. This is something you can Google. Is JP Morgan a bad place? I mean, for metals investors, I think the sentiment is not so bright, but I mean, they're the largest bank in the world. Like, you have to respect when an institution that large is doing anything, right? So it's interesting to me that JP Morgan is, as we record this now, moved a few weeks ago to $6,000 gold. This is, again, like I said, an institution that did not like precious metals for many, many years. So if they're saying 6,000, that's really bullish, in a contrarian kind of way. Goldman Sachs is at 5,400 gold. Bank of America is at 6,000 gold. We can go down the list, but you get my drift. Like, prices are moving higher. We're recording this I think around 4,600 gold right now. It's been a rough 2 days in a row here.
Yeah.
And so 4,600 gold to 6,000 gold implies a huge move. This is this year that they're talking about targets. Like JP Morgan is, I think, second quarter. Like that's like a couple months from now, right? Like so they're seeing some things that maybe the average investor isn't seeing in terms of geopolitical risk and the Fed having a new chair. I'm sure we can talk about that. I mean, that's
Yeah.
major news. There's a lot of stuff happening behind the scenes, and I think these banks are coming around to our narrative.
Yeah, it leads me right into my next question about the new Fed, the new chair. President Trump named Kevin Warsh as the next chair to set to replace Jerome Powell in the coming months. So, as you said, we saw gold and silver react negatively on January 30th following that news. So, what is your take on the market's reaction here? Do you think it's justified? Also, kind of a two-part question here. Is this a short-term
Mhm.
kind of like knee-jerk reaction, or does it change the longer-term thesis for precious metals?
Looking at the price action for gold and silver, any investor could think this is like a major sea change because the action has been so bad and so dramatic
Hmm.
in 2 days. Okay. Like silver was down 34% at one point,
Yeah.
maybe more on just January 30th and finished down about 28 or 29%. Anytime you're down 5% plus on any commodity, it's like a major day. So
Mm-hmm.
28, 29 was like life-changingly bad for some people that I'm sure were on margin using silver as a casino, right? This is investing. This isn't a casino. You have to be careful. And, we've been saying on your show for weeks and months that at $100 silver, we're going to be selling some. And we took a lot of flack for that, but we did do that. So between 110 and 120 silver, we sold about 8% of our silver, which isn't a huge amount, but it's trimming based on the fact that silver never reached that level before, right? So I don't know where the high is. Anyone who comes on your show and says that they know is full of it. They don't know that it's never been this high before, right? So how do you know where the top is?
Hmm.
And you have to do prudent things when people are following you. So all that said, I think Kevin's out of the 11 candidates was probably the most logical, successor for Powell. And he's not a pushover. He like Powell was a former lawyer. This guy is like a former Wall Street guy and has went to Stanford and is got a decorated like career, right? So will Trump be able to manipulate him as much as the markets may think? I don't know. All I can tell you is Trump usually gets his way and he wants lower rates. Period. End of story.
Hmm.
He made his money in real estate, right? You don't want higher rates when you're a real estate mogul.
Hmm.
You want lower rates. And so I think Kevin and the people that he will appoint behind Kevin are going to start coming around more to Trump's narrative in 26 and 27.
Hmm. Excellent point there. Let's continue on the gold conversation. Where do you think investors right now are making mistakes in how they're positioning themselves in their portfolios?
Yeah, on gold specifically, I mean, I think gold equities are underweight in just about everyone's portfolio that I
Hmm.
see. I have the good fortune of a lot of people contacting me out of these podcasts, and many times they have, half a million in gold to 10 to 20 million in gold in a vault somewhere, whether that's in their house, God forbid, or it's in some vault in Canada or the US or something, and they say, John, how can I get more involved with gold equities? Well, it takes more risk. And on days like today and on January, you have a bad taste in your mouth because you're like, wait, I've known gold and how that works for many years. I can live with something like that being down 10 or 12%. But when a stock's down 30% in two
Right, right.
days, that is a wake up call. Like,
Yeah.
this is not, this happened like literally in the last 48 hours of trading. So, I can give you a couple of gold names that we're
Yeah.
looking at, that are value oriented. I'm a value manager. I don't chase anything. Like, if something's up 1,000%, you're not going to see me buying it unless there's a reason. And usually there's not a reason. It's usually fluff and pipe. And, I don't get caught up in that stuff. So one that's super cheap right now, I think, and my partner Don Durrett agrees from my podcast, Feneck Commodities Report, is Lion One Metals. It's a new name for this show. We just interviewed them a couple months ago. They have a new CEO that replaced Ian, who we're planning on interviewing again, once he gets settled. But that ticker is LOMLF in the States, LOM in Canada. It's in Fiji. Again, like some of these things, you have to really do your due diligence. I had no idea about Fiji. I've never been there, and you start to understand that this is far enough away from the population and the airport that it's not a disruptive project. It's 100% owned by the company, which is awesome. And they're trading at 24.5 cents US right now in the bid. Like, I mean, this thing is super cheap. Like, I think this is one of those stocks that you could say in 2 or 3 years, wow, I wish I bought this, right? Because it has had its issues. It's got a lot of shares outstanding. It hasn't produced as much gold at the pace that the market has wanted, I guess. But you have to like look at the financials and say, okay, well, all that said, if I'm coming in as a new investor right now, that doesn't matter. Like what matters is they can get to the finish line as a current gold producer and produce gold at the highest prices we've ever seen, right? Like this is awesome. So we don't just buy exploration companies, which I talk about a lot on this show, that are 3, 4, 5 years away from production. We buy stocks like Lion One Metals as well that are closer to production because you're going to realize that upside even faster in your portfolio. Another name that again flies under the radar, I think, a lot is Norsemont Mining. That one is NRRSF and NOM in Canada. And I've mentioned that once on the show, I think around 30, 40 cents when I first met Mark. And I interviewed Mark around 30 cents US. And the stock is trading at 84 cents US now. And a lot of people would see that and say, okay, well, I missed it, right? No, I mean, it was at $1 couple weeks ago. And so it's down, 16, 17% in less than 2 weeks.
Mhm.
So these are the opportunities to say, okay, maybe $1 was a little ahead of itself, but this, 75 to 85 cent range looks attractive. And so why does it look attractive? Well, they're in Chile and they have a gold silver project there. It also has a lot of copper. So when you look at the prices of gold, silver, copper right now, they're outstanding, right? This project is going to get built, in my opinion. And Chile is moving more to the right, meaning like if you look at the December 15th elections, the guy that got in is going to be more pro mining. And that's the kind of stuff you have to look for, which is really challenging as an investor to understand all this stuff. And that's why we encourage people to contact us because these little things mean a big amount in your portfolio. Like an example would be Peru. We love Excellon Resources right now, which is EXNRF in the States, EXN in Canada. And why do we love it? Well, they had a US project of gold and they had another project in Europe, relatively small stock, like two project stock. Then last year they decided, hey, we're going to get heavily into the silver business, and they bought this Peruvian silver asset, which was previously owned by Buenaventura, which is symbol BVN. Now, BVN is the big boy in Peru. They are by far the biggest silver company. When you're
Mhm.
that large, sometimes you just divest of projects, right? Like this happens in technology all the time. It's not a core asset, so we divest this other stuff. Doesn't mean it's not worth something. And so a small company like Excellon that is 34 cents right now, 35 US, said, yeah, we'll take it on, right? So they're going to put this thing in production this summer. So again, like they went from having two assets that were maybe 2, 3 years away to now they're 6 months away. And the stock has responded a little bit. It's moved from about 20 cents all the way to 50 and now is settled back at 34, 35. But that's the kind of dips you have to buy as an investor because the market has shown you, like, okay, here's the base. It based around 20 for weeks. Then it
Mhm.
exploded to 50, stuck up there for a couple of weeks. So that was real. It wasn't like a one time, 1 day kind of thing. And then it's now settled kind of in the middle. And so you're never going to get it at 15, 20 cents again, probably because silver has gone berserk, but you can get it at
Right.
35 and it probably will go back to 50 this year. So how much money does that make you? I mean, there's a lot of upside in these little gold and silver juniors right now.
Yeah, always appreciate your insight, your expertise. To wrap things up here, John, I want to talk about what you call special situations. We've just
Sure.
seen Kitco highlight tungsten, with prices really hitting record highs amid tightening inventories, Chinese export controls, and rising demand from defense, aerospace, advanced manufacturing. Really interesting article. You've been talking about China's dominance in critical minerals since 2023. We talked about that. We even put
Yeah.
together a one pager, I remember,
Yeah.
for our audience at the conference. So, What would you say has changed now that really makes tungsten specifically move from a niche critical mineral to a real investable theme? And where should investors be looking as supply outside China struggles to keep up?
Yeah, great question. So let's start with China. They produce 91% of all tungsten in the last 2 calendar years. So I don't know where it's going to be for 2026. Let's say they produce 88%. They're not going to produce 70. It's not going to go down that much, right? So they're still the dominant force in the metal. What's changed is that tungsten is heavily used in defense. And as Trump is the grill of many, many countries, um, now you see defense spending up across the board, right? Like armor piercing bullets, armor, tanks, missiles, this all requires tungsten. And I unfortunately feel like whether or not we go to war, hopefully not, like defense spending is going up a lot in the next 1 to 3 years because countries are becoming more protectionist. And so if I'm right, you're going to need tungsten. And guess who has it?
Mhm.
China. They produce 9 out of 10 everything, right? Like we focused heavily on a few stocks that are not in China. And a couple of those would be Guardian Metal, which is GMTLF in the US, GMET.L in London. They don't have a Canadian ticker. They've announced in December, right around the time we interviewed, that they're going to uplist their stock this year. Now, that means that they're going to move to the New York Stock Exchange, probably, or the NASDAQ, right? They haven't said yet. But either way, when you're trading at $2.49, that's really, really positive because you're priced at a certain level that financial advisors, hedge funds, private equity can get into your stock. Okay.
Mhm.
Some of the stocks I was just talking about that are under $1, you won't have that luxury. But at $2.49, where we're recording this, that stock can move to the NYSE. It can get bought by financial advisors. And that means a lot more cash flow going into that stock. And when you look at how the stock is built, a billionaire owns 15% of the float. Two entities in total own about 41% of the float. I mean, it's locked up. Like half of the shares, let's just call it. I mean, it's not true that it's just half, but let's say it's only half that are not trading because a billionaire and two large entities are not trading these shares, right? So it really helps you as an investor to know these things. It's right there on their website and their news, but it's also hard for the average investor to understand what that means. And what it means is when you have like a billion shares outstanding, the stock's not going to move as much typically because there's so many people owning shares. When you have less ownership, like Guardian has, when tungsten does what it does recently, which is just go up and up and up every week in price, people start recognizing that and start moving into a stock like that. And you can see it on the chart. It moved from $2 to $3 recently, really quickly. I'll give you two more, and then we'll leave it there. American Tungsten, TUNGF in the States and TUNG in Canada. They're in Idaho, where Guardian is in Nevada, right? Both great jurisdictions. I
Mhm.
think American Tungsten is going to follow Guardian's lead and uplist as well. They're trading around a buck 70, buck 75 right now, maybe a little less. But again, they get to that $2 level. That's like the magic number in the US or in Canada. And a lot more people can start buying your stock that are of the institutional types. And I think Ali comes from the mutual fund world. He understands asset management. He understands this kind of stuff where a lot of junior mining guys don't get it. And that's an important distinction to look at. And I like Nevada as much as I like Idaho. I mean, they're both great jurisdictions. The last one was a new one for us, which is Spartan Metals. And that one is SPRMF in the States and symbol W in Canada. I got introduced to this through a client of mine. I honestly hadn't even seen these guys last year. And I looked at the chart and it had run up a little bit, but I put a nice investment into it because again, they're in Nevada. They're not super
Yeah.
far from Guardian, and they
Mhm.
own a lot of land there and past producing type assets again, right? Where when you look at the whole landscape, Ashley, it's only like less than 20 publicly traded stocks in the junior space in tungsten. There's not a lot to choose from. So those are three names for your investors that are in the US to take a look at.
Yeah, American companies love that, American made. John, always great to get your perspective. And again, as we mentioned at the top of the show, for viewers who want to continue this conversation in person, as we mentioned, John is hosting two conferences, May 17th through the 19th in DC. And then that's followed by a May 20th through 22nd in sunny Fort Lauderdale, Florida. For us here in the Northeast, that sounds really nice right about now. John brings together investors and companies across precious metals, critical minerals. You can learn more about this in both of these conferences at topshelf-partners.com. And John, thanks again for joining us. And to you investors, thank you so much for your attention and for listening to John's expertise. Good luck.
Thanks, Ashley.